We're going to look at executions against that big board. We're going to start learning about going with the flow. We're going to be learning about how to go with the flow, what kind of execution trades that go with that. So it's not just about, the technical aspect of, drawing a chart, but how to actually get that execution in place. We're going to be looking at the concept simply of failed auctions, and this is all tied in with the one subject, of course. We're going to be identifying springs from those ideas. So we're going to be using this information to try and figure out where the best opportunities, and to start reading those opportunities, because obviously they bring with them a lot of information. We'll learn how to do measures and what's the difference between a measure and a guarantee. We're going to be looking at executions in all of these different aspects, the executions. We're going to be looking obviously at the BSG squeeze, and we're going to be looking at the tipping price trades. We're going to be looking at the Heisman. Now, the Heisman takes us through to the intermediates trader narratives. And inside the intermediates, of course, we're going to be looking at the spring trade ideas in a little bit more detail. We'll be looking at those locations with the RGL, against the RGL, all of those elements that come with the spring trade. And that brings us again into that Heisman outcome. The best trade we can get in a spring trade would be obviously the Heisman idea. We'll introduce the delta basics, understanding the concept of spoofs, understanding the concept of absorption, understanding the algorithmic activities that takes place on the delta. We'll be looking at the book basics about the spoofs as part of the delta, as part of a standalone. We'll be looking into those elements. We'll be making a market. So when we make a market, obviously what we're going to be doing is we're going to start making a market from an intern's point of view. And then we'll obviously start making a market from an intermediate's point of view. So we start to make markets. We start to play those making a market games as part of that intermediate process. And as we move beyond the intern and we start to develop out some professional ideas from these elements, we start thinking, well, what does the professional ideas come from? Well, we're going to be talking about the EXE. We're going to talk about the EXE trade clock. We're going to be talking about the commercial trade clock. We're going to talk about other RGLs. So there's a lot of other RGLs we can use. There's obviously things like volume RGLs. There's Voltics. There's a lot of other RGLs we can use into that as a process. We're going to start looking at the charting detail about when we print out our charts or when we start drawing our charts, the things that we're looking for, things like change of behavior, liquidity pools. We're going to be looking at dealers' edges and all of those kind of elements that we can simply get our charts up to date, make sure we've got all the information we need. We're going to think about lean trading. So we're using that as part of our Charlie D transition. And that's what we're thinking about. When we start getting into those leans, we start thinking about Charlie D. So we tie all the elements together with the Charlie D transition trade. So obviously when you're in the intermediate section, obviously it's an order flow transition, which obviously comes from those book basics. It comes from those delta basics. That's when we get the order flow transition. And when we move into the pro, it becomes the Charlie D transition as a slight difference between the two. What else are we going to be thinking about at this stage? We're going to be thinking about spread trading. Why spread trading is really useful to understand, really useful to get a grasp of. And inside of that, we'll build a few spaghetti charts to start understanding things like sentiment, start understanding what's the storyline. We'll be dealing with fundamentals. We'll be starting to consider those fundamentals. So when we look at the process, you can see it builds on each other. This is part of the overall professional process, the big board, going with the flow as much as possible, the BSG squeeze, the idea of getting into those types of trades, developing a knowledge of the tipping price and how to read the Heisman, takes us into the intermediate phases. From the intermediate phases, we start focusing on things like spring trades, trying to get that better price for our trades in the direction of the flow of traffic. We start thinking about the Heisman trade specifically from the spring trade idea, the delta basics of trying to find that trapped trader, the book basics that form part of that, the concept of spoofing, and then, of course, making a market, the exercises, trying to make sure that you guys know how to make a market, how to get comfortable just making a market. That's all going to be on demo so that you can practice as much as you like with no damage to your account. And obviously, we start developing out not just the intern exercise of making a market, but the intermediate exercise where you start actually adding a few more elements to making a market properly. And then we got the order flow transition in the intermediate. That's the transition, of course, that, when we were talking about it, of course, this morning, Erin spotted that there was an order flow transition, but it wasn't a Charlie D transition. So the difference between the two. And then we move up to the pro level where we start examining things like the XE trade clocks, the commercial trade clocks, the RGL volume in Voltics, charting indicators, things like, even RSIs and stuff like that. We can look at these so that you get a little bit more value out of those types of ideas, looking at relative value R-squared type functions. RSIs are perfectly valid. And looking at charting, change of behaviors, liquidity pools, dealer edges, leans, Charlie D transitions. We introduce you to spread trading, because what does spread trading start telling us about? Well, spread trading starts telling us a little bit about R-squared. And we start to get into this idea of relative value, and the spaghettis and the fundamentals obviously is part of that underlying structure. So that's where we're going with this over the course of the next 4 weeks. And of course, what happens after 4 weeks is we go back over it with real examples from every day during the day when we see anything happening. It's the idea that phone call's coming in. The idea is that, of course, when you get to the pro side, when you get to this side here, you make the phone call. At this point here, you make the call. At this point here, you act on the call. You don't make the call, you just act on the call. And obviously, we fit somewhere into that balance area between intermediate and intern and intermediate pro. We obviously start moving towards that part somewhere in between here, where we start making the call itself. So this is acting and not thinking. This is thinking and acting. And obviously, you've got to have the tools to be able to think and act at the same time. Does that make sense in terms of the structure coming up?